when do you think P2P lending will gain the kind of trust that FDs have today?
It's a very different nature of product, and the way FD has been planted in our mind, that's 100% safe. It is actually not. Understanding ये हुआ मेरा कि इंडिया के मार्केट में अगर किसी को 25,000 30,000 रुपया चाहिए तो नहीं मिलता है, बट अगर किसी को कुछ करोड़ों में लोन चाहिए तो इजीली मिल जाती है.
If I am new to P2P lending,
Right.
for example. If I want to start, what are the top 2-3 things that I should keep in mind? P2P lending is dead. I'm sure you've heard this narrative very often. RBI had stringent guidelines, P2P platforms shut down, and it's now becoming a sunset industry. But is it? To find out more, today I'm hosting on the Alt Investor podcast Bhavin Patel, who's the founder of one of the earliest and largest P2P platforms in India, LenDenClub. Welcome to the show, Bhavin. Thanks a lot for taking time out. It's really great to have somebody to tell the story from the other side as well.
Thanks, Ankur. Pleasure to be here.
Thanks. So let's start with how you started LenDenClub. What was the thought, and how did you actually convince people कि हाँ किसी और को पैसा देना है तो through us you can put money.
Right. So my conviction point was more of the need of borrowers who are looking for money up to 50,000 and not getting money from the larger institution. So एक दो instances हो गए, and अंडरस्टैंडिंग ये हुआ मेरा कि इंडिया के मार्केट में अगर किसी को 25,000 30,000 रुपया चाहिए तो नहीं मिलता है, बट अगर किसी को कुछ करोड़ों में लोन चाहिए तो इजीली मिल जाती है. तो और ये लोग ऐसे हैं जिनके लिए कोई और सपोर्ट सिस्टम है नहीं इंडिया के अंदर. सो देर इज़ अ MFI इंडस्ट्री जो एक सेमी अर्बन और रूरल एरिया के ऊपर काम करती है, बट देर इज़ नो बडी हु इज़ देयर फॉर अर्बन कंज्यूमर्स. तो ये कंज्यूमर्स के ऊपर ना MFIs काम करते, ना कोई और इंस्टीट्यूशंस काम करते, तो क्यों ना इनको सर्व किया जाए. एंड देन ट्राई टू अंडरस्टैंड कि इनकी प्रॉब्लम्स क्या है, ये क्यों सर्विस नहीं हो पा रहे. देर वॉज अ कॉस्ट ऑफ ट्रांजेक्शन, दैट्स वाई लार्जर इंस्टीट्यूशंस आर नॉट डूइंग. देर इज़ अ कॉस्ट ऑफ प्रोसेसिंग एवरी लोन. There is a cost of servicing, and these are all factors why larger institutions are not addressing it. So we thought, why don't we solve this problem for such a huge market which is having a large potential in India, and especially these people are like from lower middle class or more middle class. So we thought, let's start solving this problem. And as and when we started working the initial flow of the product, we adopted P2P concept. So before starting LenDenClub in 2015, I was working with a few NBFCs in the capacity of consultant to raise their capital, or as an employee of NBFC. So NBFC model को काफ़ी closely मैंने देखा था, and I know nuances of it. Definitely it has so many pros, but there are cons also. And I thought, to address the cons of NBFC models, can we do some other model? And hence we thought of doing P2P concept, कि जहाँ पे लेंडर साइड पे भी वो ओपन है, बोरोवर साइड पे तो ओपन है ही है. सो या दैट वाज द कॉन्सेप्चुअलाइजेशन. एंड जब हमने स्टार्ट किया तो डेफिनेटली ऐसा नहीं था कि ओवरनाइट स्टार्ट हुआ. फॉर एटलीस्ट 1.5 year it was at the conceptualization level. And as you rightly said, in India it is very difficult to convince somebody to give money who is completely unknown to you, right? Even if you look at the starting of stock market or exchanges in India, or even debt market, initially people were not trusting कि इक्विटी मार्केट में पैसा डालना चाहिए, कोई भाग जाएगा, ये होगा वो होगा. कोई कंपनी के वो पैसा दिया हमने IPO में, उसके बाद कंपनी बंद हो गई तो क्या होगा. वैसे ही डेट मार्केट में हो गया, पैसा देंगे और कंपनी फिर उठ गई तो क्या होगा, सर्वाइव नहीं करेगी तो क्या होगा. तो और ये सेक्टर में भी वैसा ही इनिशियल फीडबैक था. तो मैंने जो इंडस्ट्री एक्सपर्ट से बात की, मेरे एक्स कलीग्स, मेरे एक्स बॉसेस, तो सब ने यही बोला कि क्यों कोई एक बंदा अननोन बंदे को पैसा देगा, और वो भी इतने छोटे अमाउंट का. अगर तुम कोई बड़े बंदे के बारे में बात करोगे जैसे HNI, अल्ट्रा HNI है, तो फिर भी एक बार इक्विप्ड है समझने के लिए और कर सकते हैं. तो जैसे जैसे ऐसे नेगेटिव फीडबैक आ रहे थे, तो एक बार तो मैंने खुद भी सोचा, क्योंकि कई बार क्या होता है ना कि आपको बार बार कोई बोलेगा कि नहीं यार ये तो गलत लग रहा है, ये तो गलत लग रहा है, तो आप खुद भी सेल्फ डाउट में आ जाते हो. और हुआ मेरे साथ भी वैसा. बट आफ्टर सम पॉइंट इन टाइम आई गॉट कन्विंस कि नहीं, ये हो ही सकता है. एफर्ट लगाने पड़ेंगे. रेगुलेटरी रिस्क इज़ देयर, क्योंकि आज रेगुलेशंस एग्जिस्ट नहीं करते. बट इफ़ इट इज़ गुड, वाई वुंट रेगुलेटर विल रेगुलेट इट. So yes, this was end of 2014 when this conviction came. Then I teamed up with Dipesh, who is my co-founder, and started with LenDenClub.
And I think you were one of the pioneers, right? You were one of the first ones to start P2P, and
Right.
P2P did quite well also.
Right.
Since you spoke about
It is still
yeah, I mean yeah. So that's what I wanted to understand.
right.
Ki after the guidelines that came in last year,
Right.
What in the guidelines has kind of affected companies the most?
Right.
What were the few things because of which some of the companies had to shut down or pivot or whatever?
As according to me, there were two or three points which were little difficult for people to adapt and move forward. The first point was regarding secondary market practices. So secondary market practices directly as well as indirectly prohibited in the new regulation, and the so I would not say new, it's amended regulation. So this amendment completely restricts such kind of activity. So secondary market practice was like, one loan is given by me as a lender. Tomorrow I need money, then I'll send that loan to you. You as a new lender will give money to me, and later on whatever EMIs will come from the borrower, those will be given to you. So that is like selling my loan to you. That is called as a secondary market practice.
So P2P players were doing this also earlier.
Correct. So the first set of regulation which came in 2017, those were neither saying yes on this nor saying no on this. So little gray area to operate into, but yes, it wasn't very clear. Second was every time whenever lender is doing the transaction, lender has to approve the borrower. So earlier it was more of a practice that there is a consent taken by the lender, taken by the platform from the lender, that what kind of borrower you want to give money to. Whenever similar borrower comes on the platform, loan will be matched. Now there is a change in that process. Earlier also that process was prescribed. Now it is little more descriptive. So this was the second point, and third is related to transfer of money from the platform escrow account to the consumer's account, which are lenders as well as borrowers, which is now prescribed as T+1 timeline. So let's say as a lender, I bring money on the platform, I transfer it today in the escrow account. In T plus working days, either I have to take it back or lend to the borrower, or a platform has to send it back to my bank account. And same goes while the borrower is repaying that money and that money is being transferred to the lender. So this T+1 is also quite difficult and little technical issue, and this 3 point made it very hard for P2P platform to survive with the amended regulations.
So I think the second and third point that you mentioned about the lender borrower matching and the T+1, that would have affected lenders and borrowers also, right? Not just the P2P platforms.
Absolutely. So if we look at our numbers, I think till August 2024, whatever lenders were active, I think there were some few thousands of them. Only 25% of those have done lending after August 2024. So 75% of the consumer did not follow the new set of practices, because the money is going every day. Then you have to choose borrowers every time. Now, if you look at the larger picture, it is good for them only, because this brings a lot of transparency. Everyday money is going into your account, so it gives you a lot of control. But when customer is accustomed with following certain practices, when the change happened, the first response is no, I don't want to follow this. So hence the existing customer stopped lending, but the new set of customer who were coming to the platform, they understood that this is really good for me, and hence today the flow is much higher than what it used to be earlier.
Okay, so that means a new customer who's not really invested in P2P, for them it's not a roadblock per se, or it's not a
Absolutely
hiccup for
not,
them.
because that's the new way of doing it.
They've probably not seen the earlier
Exactly.
process also.
Right.
Okay.
Because unlearning and learning becomes a problem. For the new consumer, it is not unlearning. It is a learning new thing or first time.
So for the older customers then, this T+1 rule, the way I understand it, if I were a lender on the platform, it would be painful for me also. Ki within one day, I also have to, make sure that these borrowers are approved and, then the loan gets disbursed. So how are you or how are other companies tackling this? How are you making it easy for the borrower? So I think he or she needs the loan, so they will
Right.
take it irrespective. For the lender, how are you making that process relatively easier?
So it's very easy. I mean, you can try our platform out, but the process is not tedious at all because everything is being taken care by the platform. So if at all by any chance you cross T+1, then money will directly go back to your bank account. You are informed. You can again transfer back, and this happens with less than 10-15% of customers.
Okay.
Majority of the time you are able to do it because enough borrowers are available on the platform.
Okay.
And regarding the repayment in T+1, that is also very seamlessly done. So it took around 5 to 6 months time for us also to set the system, stabilize it, and we had to invest crores of rupees to set this up. But after it was set in 6 months time period, it is very smoothless. So you won't realize that on backend what is happening, but everything follows the T+1 choosing borrowers at every time you want to lend money or whatever prescribed by the regulator.
So you're saying 80-85% of the customers are comfortable with the process.
Everyone is comfortable, but in 10-15% cases, let's say you as a lender brought money, but you got busy with some work and 2 days you could not come back. So money will go back. You can bring
But
it back
85%
next.
customers roughly
They are
are
able to
doing it in one shot.
do it. Yes. Even those
Okay.
15% are not like they are not comfortable, but they will do it later on.
Okay, okay, that's interesting. So, if I am new to P2P lending,
Right.
for example. If I want to start, what are the top 2-3 things that I should keep in mind?
So one, you should try to understand the regulation because for you as a consumer, it is important to understand what are the important regulations which platform has to follow. So that if at all platform changes the practice, you know, okay, this can be done, this cannot be done, and you can question the platform that is not as per the regulation. Second point is the risk. What kind of product platform is operating into, how the risk is being assessed, what is the maximum probable risk you are taking, that if platforms let me put up numbers in our context. So on LenDenClub, the cumulative default number till date NPA number is 3.75 percentage. So what has been the highest number, what has been the lowest number? So you can presume that okay, highest could be the worst thing, and lowest could be the best thing for your portfolio.
Highest and lowest means,
So at
can
any
you
point in
explain?
time historically, what was the highest default percentage platform reached to?
Okay.
So let's say it was a COVID period. It went up to 5.91 percentage, and the lowest is around 2.2 percentage. Currently, it is 3.75 percentage. So this is the bracket it is operating between. So
Okay.
if I as a lender is coming here, I have to check that while the risk is being mitigated by so and so uh, action points by the platform, what is the worst case scenario? So if I bring 100 rupees, 5.91 can go back. Against that, whatever ROI I am getting, would that be enough to cover 5.91? Best case scenario 2.2. So against 100 rupees investment, 2.2 can go back. In case of that, against ROI, what will be my best returns? So these are very simple basic equation you can put and understand what can happen. Third is the platform historical data. What is the size it has been operating? Because here technology works better with the scale. So that experience definitely counts. So if the platform has disbursed few thousand crore worth of loans, it is little bit more comfortable for you as a new lender, because then the practices are set, they are not into experimentation phase, and you will get better services. So these are 2-3 things which you can follow.
Okay. So coming to the point about risks, what are the risks that I should keep in mind? You mentioned one that credit risk ho gaya ki what is
Right.
the NPA, but what
Right.
are the other risks associated with P2P lending?
So credit risk is there, operational risk is there.
Okay.
That the money which is coming to you, are those money coming into T+1 format? Are you getting regular money from the platform or not?
Okay.
Are you getting compilable data from the platform or not? So for example, I have you as a borrower, you are paying EMIs and T+1, it should come to my bank account. So while money is hitting my bank account, is, am I getting any kind of report from the platform,
Hmm.
which also mentions that okay, so and so money received from Ankur, so and so received from Dipesh, and total amount so and so. Right. So if operational clarity is not given by the platform, that becomes a risk for you as a lender. Third comes the regulatory risk. So if there are any change in the regulation that will directly or indirectly affects you as a consumer. So it is always better to keep tracking in the news if there are any comments coming from the regulator or how they are seeing this as a sector. So I think these are two, three things which affects you. And fourth, company level data, as I said, that what is the kind of experience platform has. Second, what kind of volume they have operated. Third is what is the balance sheet of platform, how much profit they are generating and all, because these are indirect measures to for you to assess and understand your risk. Because if platform is unable to survive, who will service the loan which you have given to the borrower? So this becomes some important risk areas to mitigate.
Okay. So just to understand, in case of P2P lending, say borrowers have borrowed money, so the collection is done by the platform, or how does the collection piece work? Like say one person has delayed payments, so does the platform follow up with them, or how does that work?
So collection is one of the service which we offer as a platform,
Okay.
and that falls into our work area. So we
Okay.
follow up with them in like any other lending companies,
Okay.
including all the digital touch points, calling touch points, and everything.
Okay.
So it's a
then
very standard process.
so then that's where I think the platform becomes very important, like
Absolutely.
understanding, doing
Platform and
your
its
due diligence.
experience. Right. Because all these things become more efficient along with the experience.
Okay. Okay. So, since we're talking about risks, there's one aspect I would want to kind of discuss. So we run at Alt Investor, we run a community on WhatsApp. We have about 2,500 people there, very active investors. They keep discussing, asking questions to each other. And recently we've heard that there are the defaults in the P2P space have increased. So I wanted to understand from you if that is really the case, or is it just few people whose money has gone, and they've not got it back, or what do the numbers say? Have the defaults
Right.
increased in the past few months, or past 1-2 years?
So I think there are two views for it. One could be actually defaults have gone up on some of the old platforms. Second view is the way people look at the default numbers. Now I also saw some LinkedIn article people have been posting talking about it. So say in P2P, P2P platform does not underwrite any loan on their books. It is underwritten by the lenders. So they don't own any of these loans. If you compare it with normal NBFC operations, normal NBFCs underwrite the loans, and then when they become NPA, they can write it off from their profits or capital. It cannot be done by P2P lending platforms. Now, just to give you perspective for this second point. Now, first part, I think RBI has the data we do not have, so I cannot comment on that part. Second part, misunderstanding of the NPA. So, when an NBFC has given, let's say, loan of 100 rupees, and the P2P has also given loan worth of 100 rupees through its platform, why? Via lenders. Now, out of this 100 rupees, 5% is a default for NBFC. Now, after 1 year, 2 years, these loans become completely bad, and NBFC has a capital of 25 rupees, it will write off 5 rupees. So now the net NPA becomes zero on the NBFC's book. In case of NBFC P2P, let's assume the same numbers. 100 rupee processed by the platform via lenders, 5 rupees NPA. After 1 year, 2 years, this 5 rupees will always remain there. By that time, P2P platform stops operations, and all the 95 good assets, 95 rupees worth of good loans get run down. Now only 5 rupees portfolio is pending, which is into NPA. You will see platform NPA as 100%. But is that a true picture? No, absolutely not. The true picture is at the origination level for P2P platforms. That platform gave loan worth of 100 rupees, 5 rupees defaulted, 95 rupees given back successfully along with ROI. So the lens of looking at NBFC business and NBFC P2P business has to be very different. and hence there is a lot of misconception which are being discussed on a lot of news article. We cannot respond to all of them. It's good that you are asking those questions on behalf of the investor community, so I'm telling you that this is one of the biggest misconception which happens.
But in terms of numbers, then say for LenDenClub, have you
Right.
seen any rise in defaults or any increase in NPAs? Or and if yes, do you see that increasing, decreasing, remaining the same in the last say 1 year?
So last this financial year, our assumption of default rate was between 3 to 4%. Right now we are at 3.75%. Last year it was around 3%. So we were operating accordingly, because time to time you have to change your mix of borrowers, and basis on borrower mix or your algorithm choice of the credit model, you have to assume that what kind of risk will come. Now a year back it was, I think, around 3.1. Right now it is 3.75, but accordingly ROI also gets adjusted. Now we are again seeing some kind of downward journey, so we are passing on some benefit of rate of interest reduction to the borrowers now. So lenders are remaining unaffected whether default goes little up or down, because that gets adjusted or in the pricing of the loan, which is ROI.
Can you explain that a little? I mean, how the
Okay.
adjustment happens?
So let's say 100 rupee loan is given for 1 year and ROI is 20%. Now the default percentage is 5. So lender will ultimately make 100 rupees principal, 5 rupees did not come, 95 rupees plus 20% ROI. So becomes around 114 rupees. That is the net which they landed up. Now after some time the portfolio improves and the default rate comes down to 3%. Now what equation will be? 100 rupees given, received principal is 97 rupees and 20% on 97 rupees. So it becomes around 116 rupees. So you got 2 rupees more at a portfolio level compared to what you got earlier. Now either this can be passed on as a benefit to the borrower, or lender's return will go up. In this particular case, lender got 116 compared to 114 before, so lender's return got enhanced. Now as a platform, because risk went down, our risk matrix will change and automatically ROI offered to the borrower will go down. So that default rate will come down by 2% from 5 to 3. At the same time, ROI will also come down from 20 to 18. So net return to the lender will still remain 114 rupees, but because default gone down, the ROI to the borrower went down. So lender generally remain unaffected, because that is how our system works.
Okay, okay, got it. So, how is the industry doing now? Like, one, how is LenDenClub doing? And what's your take on the industry? How is it doing now? It's been a year since the RBI circular came out.
Right.
Platforms who could not, comply with them have stopped.
Right.
Platforms like yours who were compliant have continued. How is it? How is this? What's the status now?
So industry size came down from around 8,500 to anywhere between 2,000 to 2,500. I think it has already bottomed down. For us as a platform, we also bottomed down around 750 crore worth of AUM. Now we are back to close to 1100, and by end of the year we should be around 15 to 1600 crore worth of AUM. I think by that time industry will reach 3,000 to 3,200 crore worth of AUM. There are 4 or 5 platforms which are currently operating. Couple of new licenses also are being issued by the regulator, and around 7 or 8 players have stopped doing business after last year's regulation. That is where industry stands today. Next 2 years, I see that there are 4 or 5 sizable player operating into this market, and we will still remain one of the leader in the market.
Okay. And when do you think, uh, you know, the numbers will come back to what it was, say, pre 2024?
I
Like in the
think
next 3 to 5 years, or when do you think that will
I think
happen?
2 years should be enough.
2 years,
It should be
the
enough
numbers will
to reach
come
back
back.
to 8 to 9,000 crore worth of AUM.
Okay. Okay. One last question. Um, when do you think P2P lending will gain the kind of trust that FDs have today? I mean, it's a safe. FDs are safe,
Right.
backed by an insurance cover, etc., etc. So,
Right.
when do you think P2P lending will get that kind of trust? Or you're saying that it may not get it, but it's not even required. It's a risky product. So, what's your take there?
I would say it's a very different nature of product, and the way FD has been planted in our mind that it's 100% safe. It is actually not. Up to rupees 5 lakh is only safe, and we know that when any bank goes bad, what happens when you have more money kept with the bank beyond 5 lakh rupees, right? So still people, because people do not have financial literacy in our countries, everybody assumes that FD is risk free, which is actually not a case. If you will compare with any alternative investment, leave aside P2P platforms or P2P lending, whatever together losses people would have incurred, people would have lost more money through any of the bank closure. Right, so those have happened. However, RBI has been very conscious in last 5-10 years, and they have been very proactive. Hence, we are not seeing any more accidents. So I assume that in future it will not happen, but still the risk related to FD remains there beyond 5 lakh rupees. Coming to P2P, is it required? I don't think it is required. If you look at the way consumers are evolving in India, I think they are becoming more and more aware about the risk connected to each and every instrument. They also understand against the risk what kind of return I am generating, and hence, if you look at last couple of years data of money coming to the bank FD and other instruments are much higher compared to bank FDs, where regulator is also asking banks to increase that amount, right? So I think the more consumers are aware about these facts or risk versus reward ratio, they will choose what is more convenient to them. And I would say rather than a new age instrument like us getting benchmarked against FD, I would say it should get benchmarked independently. That okay, there is a risk, but there is a higher reward as well, and let me choose if it is convenient for me. So probably now it is not required. If we were standing 15 years back, possibly I would have said yes, because 90% of the people in India would be thinking only about FD. But today it is not, and you run this platform, so you know the kind of conversation you might be witnessing and the kind of appetite people have towards new instrument, new experiment. And believe me, I have been meeting so many customers. Sometimes they also say it's okay, I mean, even if I lose 5 lakh rupees, 10 lakh rupees, I still want to do experiment so that I keep learning new things, or if that gets more return at a portfolio level, I'll still make more. Right, so that is the kind of risk appetite of the people which are operating in the market today. So I think it's not required now.
Yeah. So the reason I ask this is also because a lot of new investors at a high level, when they see that, my money is going to whatever 50, 100 borrowers, they assume that, P2P is extremely safe.
Right.
I will make good returns there for
Right.
sure. But yeah, the message to investors is that it's not the case.
Right.
You cannot compare that with a safe instrument. It has its own risks associated, and
Right.
you have to make sure that you know the risks before you invest.
Absolutely. And if you use the instrument wisely, probably you will make even better returns than any other instruments. It can go beyond 15-17% also. But again, you have to understand it rightly. You have to match your timing. You have to keep re-landing whenever you get cash flow and all. So as I said, you need to understand and get involved. What is the risk? How I should operate and how I should manage my money. And that goes well with every instrument, whether you talk about stock, whether you talk about mutual funds, or any alternate investment, or for that matter PMS or startup investment. Everywhere you have to get involved and manage it. Here also, if you manage, that can give you really good results.
Great. Great. Thanks a lot, Bhavin. It was great interacting with you. And again, thank you for coming and, talking about the other side of the story as well. Thanks a lot.
My pleasure. Thanks.
Well, that's it for today. If you like this podcast, do consider subscribing to our channel and joining the Alt Investor community to interact with fellow investors just like you. The link is in the pinned comments.